What's moving in early trade? JP, what do you have
surprise,
there?
surprise, Reg. I do have Marvin Germo also. He's with us today, of course.
Managed to wrangle a guest down there,
Resident
didn't
financial
you?
planner and BPI Trade Ambassador, of course, to talk about the markets in general. Now, Marvin, of course, given you're here also, you've heard a lot of the picks we've had today before the open. Agri-Nurture, Century Property, Security Bank. It sounds almost as if we're buying the news. Is that a wise strategy given these picks? Your commentary on the three we've actually looked at.
Fundamentally speaking, I like Security Bank more than Agri-Nurture and CPG. Agri-Nurture has to prove a lot first in terms of producing a track record of earnings. CPG's earnings over the past few years have been literally slowing down over the past years. Probably this is just movement based on news. On a technical aspect though, a bounce from, if Agri-Nurture stays above 4, I think it will turn bullish even more. CPG right now is still pretty much bearish, so I'd still stay away from it. Probably over the short term, it might just have some short spikes moving up. But Security Bank right there, increasing ROE, earnings has been growing, and it's in line with our growing economy as well. So
the fundamentals are still favoring Security Bank, at least in your view.
If I would rank the three, I'd go with Security Bank more than the other two stocks.
Now, you also have a couple of picks right now, Marvin, and very, very interesting also, especially the first one we're looking at right now, GT Capital. Now, this is one of your picks right now, despite the fact that they're near a 2-year low, and a lot of the news, of course, around this is surrounding the potential rise in interest rates and then how it might impact auto loans and auto sales. I mean, there's still a pick of yours. I mean, could you tell us why?
Okay, a couple of things. The past few months, we saw the market being battered down. Pretty much a lot of the bigger stocks. But what you can see from GT Cap is its track record of earnings. They've been resilient through the years still. So how great the company is, its exposure to the large consumer market via Toyota, it's one thing that you can actually consider as a bright spot still, in spite of raising interest rates. And another thing I'd look at it is it's relatively cheap right now at a P of 12. It's something that makes it a bit attractive. Though the stock is bearish, it could probably slide down to around 1,000 or 1,001. But for people who have longer time horizons, this is one cheap stock that they can actually consider right now.
And speaking of cheap stocks that some might actually be a little scared of right now, I'm just pulling it up right now on the screen. Ayala Land, also another one of your picks. Property stocks have been quite battered also recently, Marvin, given all this foreign fund outflows, and the darlings have turned into the dunces at the dance. Why are you so bullish on Ayala Land as well?
Okay, just a caveat for everyone. For those who are following the trend, the stock is still relatively bearish. For those who want to be position traders, it's not still a buy signal for it. But for those who are investors, the stock now is cheap. 23 PE ratio. It's one of the cheapest it's ever been in the past 5 years as well. So you're buying a stock that has growing EPS, ROE that's relatively high as well. So if you're looking for something that's a bargain, Ayala Land is a stock to pick. It could probably go down to 30 to as low as 27, but even at these levels, it's something cheap for people who have relatively longer horizons.
Very interesting. Q, I believe some of them have questions about the gallery.
JP and Marvin, we just want to jump in very quickly here. Marvin, I'm very surprised to hear you sound so bearish over Century Properties. You don't think the affiliation with Trump could give the stock a boost in the midterm? I mean, we already have Jose Antonio saying that he hopes to have part of the Trump family at the inauguration of his tower along Calayan Avenue next year.
I think sentiment-wise, it could add some buyers to the table, but I'm a person who looks at numbers more. So I would really like to see that translate into numbers and increase in earnings. And I guess they're up against a lot of other property development companies that have been, I guess, earning more than them and growing more than them at a faster rate in the past years.
So calm down on the news and focus on the numbers, basically.
I guess for those that are looking for quick punts, for those who would want to ride on this news, this could be a good opportunity for them. But for those looking for value, I'd like to see more numbers pick up first.
Now, Q, speaking of numbers, Q, I believe has another question.
Well, yeah, gents, let's talk about the broader index. Are we stuck between 7,100 and 6,800 until the Fed raises its rates?
I mean, basically, just asking also about where we're stuck right now. We've seen the PSE pretty much bouncing between 7,100 and 6,800 at the moment. In fact, we're seeing that bounce up again for the PSE, going up after almost touching 6,800 at the early session. I mean, are we pretty much stuck here until Janet Yellen and company decide to make their decision in mid-December?
Okay, on a support and resistance level, I believe that the fact that we failed to hold 6,900 gives us a downside risk to around 6.6 to 6.5. So I do
6.6 to 6.5.
6.6 to 6.5 until something changes. People are that you're correct that people want to stay in the sidelines first because of the news that there's a higher probability already that the Fed would raise rates. So until something positive happens, I think, and if it fails to stay above 6.9, we could go to 6.6 to 6.5 over the midterm.
Now, given that we've got that much room going down, Marvin, I mean, what is your strategy right now? Given all of this volatility and all this movement and topsy-turviness in the markets, I mean, you've also talked to me off camera about the difference between between a short-term play and a long-term play. What is your strategy, or how are you looking at things right now?
For people who follow trends, obviously the market is headed down still. I'd still stay in cash. I'd still wait for reversals, signs for reversals that the market is moving in a different direction. Until now, we haven't seen that. Although there are select stocks that are still moving up, like a lot of the stocks like in the mining industry from Nickel Asia, who's been doing a counter trend compared to the other stocks in general. But for those with very long-term horizons, I'd pick value. I'd look for the stocks that are really, really good. The problem over the past few months was you saw a lot of good stocks.
And how would you define this value, though, Marvin?
Okay, I'd look at its growth in earnings, I'd look at its ROE, and I'd look at its PE to see how cheap it really is. So similar to what I mentioned about Ayala Land, a company that's growing, expanding in line with the economy, ROE that's relatively stable and growing, but the PE that's one of its lowest in the past 5 years. So pick growth and pick stocks that are cheap.
Now, talking about mining, of course, you did bring up mining also as being perhaps one of those sectors. It's been going up quite a bit also. And is it really due to this fact that there's a pickup in mineral prices, some of the analysts we've talked to actually said, or is there more to it than that, Marvin?
I think because their main product is commodities, whatever happens in global prices affects them. It affects their bottom line, it affects their earnings. But one thing that you can consider as well was when the market was being battered. When mining,
we have it here, I believe, in the chart.
When the mining sector was being battered, the PSI was moving up. So when it came to a point where when people were selling down the PSI, they were looking for the people who were bargain hunting, were trying to find sectors that were relatively cheaper, and one of those was the mining sector. So you had a lot of stocks that were good there, the Semiraras, the Nickel Asias, that were just battered because it was part of the mining industry.
And that divergence really just happened the second half of the year, too.
Yep. So what we're seeing now is the mining sector benefiting from it being relatively cheap because of it being better the past few months.
Great. Okay. Right. There's more to move actually right now. But Marvin, thank you again for all your insights in this day. It looks like we're having a positive day, but early. We'll be watching the markets as closely as you are, sir. Thanks very much
for having me.
Guys, back up to you.
Well, more trading action as the session gets underway. But first, let's revisit our top stories. Local stocks start the trading